folks, welcome back to the channel. This is the SPY options update from October 30th to November 3rd, and it was quite the week for the market. This is the hourly chart, and you can see on Monday went up, Tuesday even higher, Wednesday, Thursday, and then Friday. So it has been very bullish all week. The S&P 500 almost gained 6% in just the last 5 trading days, which was more than I made this week, which was just 2.5%, earning $753 in option premiums net of transaction costs. Here were my trades on Monday, made $304, Tuesday $204, Wednesday was an interest rate announcement, $351. Not too many trades, just trying to catch momentum as the market swings up. Thursday I lost $166, and part of the reason was because on Wednesday I had put in a bear call spread because I thought the market might go down the next day, but obviously every day was up this week, so I had to close that position for a loss. And also, if I change this to the daily chart, you can see this was Thursday right here. There was a massive gap up, and the way I trade options is usually selling them. So when there's a huge market movement, it's usually not very good for me because those days are harder to predict. And then Friday today, after commissions, I made $60, and it was just a couple of trades, and I'll go over these in a second. But just overall picture, here is what the graph looks like. The blue line is my return so far, and then the purple line is the return of the S&P 500 as of week 44 for this year. So taking a look at my Interactive Brokers client, you can see I sold a 435 put in the morning because the market was going up and I expected the market to continue going up. I bought the 434 for protection. So overall, that was a credit of $27 times 2. So if I go to the 5-minute chart, this would be for Friday. It looked like we were going up this channel. So I decided to go long, and 435 would be right here. That's my strike. So as long as SPY finished above 435, then I would make 100% of the premiums. Things were going mostly good until like literally the last 10 minutes of the trading session. You can see SPY cross back below the 435 price point. So at basically market close, 1 p.m. Pacific, I got out of those 2 positions that I went in earlier, and I basically had to buy the 435 put back. And to close the position of the spread, it costed me $13 per pair of contracts. So that's a total profit of $28 minus some commission. I had some 435 calls from earlier this week, and those were automatically closed out, charging $8 per contract. And then finally, I have 2 bear call spreads where I am short the 435 call for next week on Monday. And that's because if we look at the daily chart again, it looks like we are quite extended from the EMAs. So I would anticipate a move back down sometime in the next week. So if on Monday SPY continues to go up, I'll probably just roll this bear call until the following day. Because similar to what I mentioned in the previous video where the market was down here, I said that it was too extended from this blue line, which is the 21 EMA, and it was likely that we're going to get a bounce before most likely going back down. And it looks like we got that. This is like the mother of all bounces. I was kind of anticipating at least one of the EMAs to stop this upward momentum, but it looks like nothing has stopped it. The black line, by the way, over here is the 200 EMA, and if the market is above this black line, then it's generally a sign that for the next 3 to 6 months, the market is going to go higher. If it's below, then it's going to most likely go lower. So I was bearish for the next few months, especially when the market fell a lot last week. But now since we are back up above the 200 exponential moving average, I'm medium-term bullish now. So going into the end of the year, I would expect prices to go higher. However, before it does that, I do expect some kind of pullback, especially when if we draw a channel over here, connecting the previous high point, which was over here, to the high point before that, we can see that this channel has now been broken and we've gone outside of it. So in order for the market to go higher, it would most likely have to come back down and retest the top of this channel before going back up. And it might even fill this gap over here. So it could do something like that. And this would be like a false breakdown back into the channel before taking off again. Another reason I think at least sometime next week, the market is most likely going to give back some of the gains it made this week is because usually when there's like 5 green days in a row, and especially when the momentum is really strong and it's leaving all these gaps in between here, then it's very likely to go back and fill those gaps, at least 1 or 2 of them. We can see here 5 extremely bullish days. Then what happened next week? It went down. 5 green days over here, extremely bullish. Then what happened after? It went down and filled this gap in the next week. Extremely bullish, and then some kind of correction over here. So it doesn't matter if the overall trend is going up or down. Whenever you have a huge run up in green days, it's usually followed by giving back some of those gains. Even over here, when there was a multi-day upward momentum and it didn't really go down that much, but it just consolidated before a large aggressive leg down. So watching the red line here, the 50 EMA, is really important. And at this point, the market is above all the EMAs. So I'm going to wait for a retest of at least the 50. And if it bounces off the 50 and it does that, then that's very bullish. And I would be long the market as it will most likely continue going up for the rest of the month. But if it breaks down past the 50, then the next targets would be the 21 and the 9 EMA, the blue and the green here. So for next week, I'm looking for some kind of pullback. But after that, I think the market is going to continue going higher as long as the market can stay above the black line here, the 200 EMA. So that's it for this week. Thanks a lot for watching. Good luck with your investments, and until next time.